Good afternoon, ladies and gentlemen. It's your boy Jay Stein coming at you with a little post-market recap. Oh, what a freaking ridiculously annoying day today. I gotta say, I just made that rhyme. I didn't even mean to. I should become a rapper. Yeah, Jay-Z ain't got nothing on me. Anyway, so some earnings that I talked about this morning just got released. FedEx, they got a beat. Nike, they got a miss. I don't care about any of that. It's inconsequential. Here's what happened today that mattered. A, Treasury bonds. I think the general consensus is that investors don't believe that the Fed is going to be able to control the yields as much as the Fed said they could. Jerome Powell basically came out yesterday. Anybody that watched my video this morning or yesterday, which was like 4 or 5 people, which is fine. The Fed came out. They said they're going to continue asset purchasing, meaning that they're going to print money and keep buying stuff that's probably meant to, not probably, that would fail, that should fail. So they're going to keep doing that. They're going to dilute the dollar, and rather than implementing straight up yield curve control, and I always have to say that so slowly, and if you challenge me, say it 3 times in a row and act like you can do it. Yield curve control. They're not going to come out and call it that. That'll be Armageddon. Everybody would freak out. So what they're going to do instead is pump dollars into the market. Okay, asset purchasing. Call it what they will. That's what they're doing. Their version of yield curve control is printing money. So, basically, I'm trying to think here. I didn't really take any notes. So, what happened today was we saw a sell-off, and the reason being, in my opinion, at least for me, I took a lot of profit, okay? I'm not saying run off and start shorting everything you see, but I took a lot of profit, okay? You could read what I'm saying. Anyways, so I took the profit, and I'm kind of standing back, and here's why. There was a specific resistance level on the S&P that I was watching that the S&P actually broke through, and then it held it, and then it flexed it, and then it dumped it today. Now, the only other time I can remember was back in February of, what year is it now? I don't know, February 2016 or 2017, when everything took a dump. It started on a Thursday. Then that Friday, it began to look really ugly. And then that next Monday is when we saw the epic I don't want to say flash crash because it was like a major crash 2 days in a row. And again, I'm not saying that's what's going to happen. I'm not saying short the freaking market. All I'm saying is I took a lot of profit, and the hallmarks here are similar to what I saw back then. With that said, oil took a massive hit today. You're talking about your mid-size operators, your service companies, all of anything oil related, particularly the mid-caps. And the mid-caps are what matter the most to me because, as I earlier said in another video, they're the most susceptible to price fluctuation when it comes to cost per barrel. Also, they're oil field service companies. If the demand of oil or the price goes down, price per barrel goes up. Thus, oil field service companies are no longer needed and their prices are dropping off. Anyways, it's all pretty simple. But that went down. I'm talking about like oil went down like over 8%. It's well under $60, which is an issue. Because oil, and I get it, I understand what people say, oil is such a small part of the market now and this and that may be true in terms of market cap and the direct effect that these oil companies have on the overall markets, but don't get it twisted. Energy is energy, and we all rely on energy. Now, I am a huge proponent of alternative energy. I love solar. I love wind. I love alternative energy, but it's not there yet. It cannot sustain what we need as human beings across the world in terms of turning on our light bulbs, let alone our air conditioning and our computers. We need oil and gas. Simple as that. Simply put, done. That is the only way to describe it. So, when oil starts tanking, it brings the market down. So, I know I'm rambling here. The yields, the treasury yields, yes, they have spiked, but they have not hit that 1.8 mark, the one I've been warning about. So they were hanging in like right at about like that 1.73, let's just call it that, throughout the day. But it was going up a little bit, going down a little bit. So all of a sudden the market starts tanking, and I can't quite figure out why until I look at the price of oil. And I can't help but think maybe that had something to do with why the market freaking tanked this afternoon. So that is something I am definitely concerned about, along with the yields. So we have those two issues going on. The dollar in and of itself, of course, it picked up strength. It did, of course. Negative markets, negative everything else, dollar goes up. That's perfect Federal Reserve magic. Beautiful. Except for it sucks for the stock market. Again, the 10-year, that thing was bouncing around right in that range. And if it was in the morning, it was having a direct effect. Now, in the afternoon, I should say, it really wasn't correlating. It was staying the same, and yet the market was making massive moves down. So I'm not exactly sure how to make of that. Earnings, I don't care. I bring it up in the morning. Hey, this company that, this company that. Look, FedEx, they made a beat. They beat their earnings estimates. Nike, they missed. I don't care. I put it on mute. The only reason I know that is because I looked over at the TV and I freaking saw it. Inconsequential, okay? I don't care. What I do care about is the stock market in general and the things that are making this market move. I'm sorry if I seem a little frustrated, especially because I made a lot of money today, so I shouldn't even be. I should be happy. I should be popping freaking fireworks and whatnot. But anyways, other than that, guys, I don't really know what else to say. There's a lot of questions. If the yields come down, the markets come back up. The oil, if that comes back up, I don't know. I do not know, other than I know that support level I had for the S&P was dropped significantly and closed significantly lower. Again, I'm not screaming or saying, not only am I not going to short everything, that anybody else should short anything. What I am saying is that history doesn't repeat itself, but it does rhyme. And this is a telltale sign. This setup, I do not like it. I'm glad I took profits. And if the opportunity to make money comes back up tomorrow or next week or so on, whatever, I'll hop back on it and I'll make some more paper. I'll get paid. But until then, let's see what happens till tomorrow. I don't want to say I'm excited, but, obviously there's anticipation. Anyways, guys, I hope you did good. I know this is a long video. My fault on that. Market recap. Jay Stein. Please subscribe, man. Makes me feel a lot better. It really does. It helps with my self-esteem. My wife even notices. Anyways, guys, have a good night. I'll holler at y'all later.